Hello traders in India and friends of Strike.money. Julius the Kampenaar here with a quick video on the use of RRG or relative rotation graphs. I want to start this video with a daily RRG of Indian sectors, and you see them listed here on the left, and here are the rotations. And when you grab the handle in that slider above, you can actually scroll through history and you can see how sector rotation it has been playing out over, this was set to the last 3 months. You can beef it up to a year. Now, the rotations here are, I'm going to say, pretty clear, because what I'm trying to look at is especially the direction of the tails. So something that is heading in the northeastern direction, like CPSC and energy, that is considered to be pretty strong because those sectors are picking up both in terms of relative strength, RS ratio, that's the horizontal scale, and RS momentum, which is the vertical scale. It's the best of both worlds. If you go the opposite direction, so you go southwest, then that's the opposite. You're losing in terms of relative strength, relative trend, and you're losing in relative momentum. Sector like media or FMCG healthcare is in that path right now. Now the daily RRG gives you a little shorter term outlook. So when we beef this up to the weekly RRG, you get a different picture, obviously, because this is looking at longer trends. So if someone asks what the difference is between a daily and a weekly RRG, it's the amount of data that has been processed by the algorithms, and it gives you a longer or a shorter term trend. Now here we have the weekly RRG, the weekly trends, and the reason I'm bringing this up is because there are two sectors that are going through a what we feel is one of the strongest possible rotations, and that's when you move from leading into weakening, and then you go back up to leading. Because what that means is that that sector has already started a new relative uptrend, because that happened when it moved from improving into leading. Then it lost some momentum, it dropped into weakening, which means that the uptrend, the relative uptrend is still there, but it's going through a setback. And then it starts to pick up again. So a sector like consumer durables is exactly doing that. You can see how it moved leading, dropped into weakening, and now it's curling back up and crossing back into the leading quadrant. What that means is that consumer durables are starting a new uplag in an already established relative uptrend. And another sector that is doing the same is the automobile sector. Nifty Auto is doing a similar trajectory. If we would play that out, we would see a similar rotation. Let me grab that here. So here's autos, and they drop into weakening, and fast forward, they now start to pick up. So those sectors are worth looking at from a little bit of a closer perspective. What they added in the program is you can now bring up a chart, and that's quite a nice feature, I've got to say, because now I have a chart with the RRG lines, and I can bring up consumer durables and then zoom in and see what's happening. And here you got the RS ratio line, which is at a high level, but starts to pick up, and this is the RS momentum, which indicates the little setback that we had, and it's now starting to move back up. And you can see how it's almost crossing that 100 level, pushing consumer durables back into the leading quadrant. And obviously from a price perspective, this is a very nice chart, which continues to push higher, making higher highs and higher lows. The other sector that we looked at was the automobile sector. And what is nice here is the same kind of setup. You can see how the RS ratio, the metric of relative trend, has come down. That's the push down by the negative momentum. It is remaining, it's 101, almost 102, so well above 100. and starting to make a new low, so starting a new relative uptrend, a new up leg in an already established relative uptrend. And you can see that that is accomplished and accompanied by a break to new highs, which is obviously adding to the positive outlook for this automobile sector. Anyway, what I wanted to highlight is especially the fact that these rotations that go from leading into weakening and then back to leading, those are the ones that are really worth our time and effort, and they usually provide pretty good trading opportunities. Thanks for watching, and I'm hoping to see you again in 2 weeks' time, same place.